What's going on, everybody? In today's video, I have a conversation with a real estate broker, one of the best real estate brokers out in Delaware. His name is Jay Doaty. We are in a coaching group together every Wednesday morning at 7 a.m. So we hopped on a one-on-one session and we talked about cold calling for a real estate agent. And I know he implemented some of the stuff we talked about. I got a few appointments yesterday, which is awesome. And then the second half of the conversation, we talked about the real estate market and real estate investing. So I got a lot of tips about real estate investing. Like I mentioned in a previous video a few weeks back, that is a big focus of mine right now, is figuring out real estate investing. It's a big goal of mine in 2021 is to get that going with my dad. So going forward, I want that to be a big focus of this channel. The sales stuff is going nowhere. Absolutely nowhere. That's the bread and butter and the backbone of the channel, but real estate investing will be a big part of this channel. And this is a video that has a lot of good tips and insight into that. Hope you guys enjoy it. Have a great day. Everybody's different, right? What works for me might not work for you. So a big thing when it comes to the cold calling is going to be A/B testing, different cold call scripts, excuse me. But there's one thing that I think is non-negotiable when it comes to a successful cold call script, and that is a permission-based cold call script. Me and you were calling people who were interrupting their day. They could be out with their kids. They could be showing a house, whatever it is, but you're interrupting their day. So a big thing when it comes to cold calling for me personally is I have to get permission to proceed with the call. So when I get permission to proceed with the call, then I go into the reason for the call, ask an open-ended question, and I'm in the conversation handling objections. And if it makes sense, I'm then going to ask for a meeting. So for me, there's so many different ways to ask for permission. But if I was calling you, Jay, and you picked up, and I'll do this really slow, this is how I typically open the call. I open it two different ways. The first way is probably the more popular way for me. It's really based on how the person answers the phone. But they'll be like, hey, this is Jay. I'll say, Jay, thanks for taking the call. Listen, Jay, I want to be upfront with you. This is actually a cold call, so not sure if you want to hang up on me, Jay, or give me 30 seconds and then decide. 80% of the time, I get 30 seconds or a minute, whatever I'm asking for. Yeah. Or I might say, this was one I used a lot, and it worked really well. Jay, you're probably going to hate me for this. This is actually a cold call. Do you want to hang up or can I steal a minute? Yeah. 80% of the time, I'm getting at least a minute. I'm not saying my name. I'm not saying what company I'm with. I'm letting them ask me, well, who is this? What do you want? Whatever it is. And then I'm proceeding into the call. So that's the first way I open a cold call. The second way, if the person answers the phone and they sound super friendly, I'll say, Jay, thanks for taking the call. It's Matt with Watchdog Project Management. How you been? And I'm not saying how are you. I'm saying how you been. And I know it might sound weird, Jay, if I'm asking someone how they've been when I've never spoken to them
makes sense,
before.
though.
Yeah, it kind of scrambles their mind a bit. And actually, there's a study on, it's gong.io. They analyzed, it was like 90,000 cold calls, and they found that cold call opener was the best cold call opener. How you been? Yeah. So then after we do a little bit of small talk, how you been, I then go back into that permission-based opener where I'm saying, listen, Jay, really appreciate you taking the call. I know the last thing you probably want on a Tuesday at 9 a.m. is a cold call from me. Not sure if you want to hang up on me, Jay, or give me 30 seconds and then decide. Yeah. And like I said, 80% of the time, I'm getting at least a minute. So I'm just buying myself some time. I used to just go into the call, Jay, if you picked up, Jay, thanks for taking the call. It's Matt with Watchdog. The reason for the call. But if you don't get that permission, you don't know if they're actually listening to you. Yeah, because again, you're interrupting their day.
Opportunity to get off the phone at that point.
Yeah, and Jay, I'll send you about 17 different cold call openers that are permission based. Yeah. From this guy called Josh Braun. He's on LinkedIn. If you're not following him, I would follow him. Braun. He also has a YouTube channel. But when it comes to cold calling, prospecting, cold emailing, I think he's probably the best in the business. And a lot of what I do is just based on his coaching. So I'll send you that list, and I would just encourage you and your team just through those 17, you're going to find something that you like that works. Saying, you're probably going to hate me for this, Jay. This is actually a cold call. Do you want to hang up or can I steal a minute? My boss hates that. It doesn't work for my boss, but it works for me. So you just got to find what works for you.
what makes the most sense.
what makes the most sense. Yeah. So just, I'm not a fan of like the cookie cutter. Everyone has to say the same thing because the words I use are different than the words you use, and it's going to sound different.
Yeah.
So
Your tonality and charisma is going to be different too. So
exactly, man. Exactly. So I'll send you those 17 cold call openers. Now, once I get that minute, this is typically what I say. My name's Matt. I'm with Watchdog Real Estate Project Management. The reason for the call, Jay, typically we get invited in by people like you, VPs of facilities, as their organization is approaching a capital project. Could be a large renovation or a relocation project. And usually, Jay, it's when the internal resources are stretched too thin. So we'll be invited in. We'll act as an extension to your real estate teams to help get those projects across the finish line on time and on budget. I was curious today to learn, Jay, how we might be useful to you and your team down the road. How's my timing regarding any potential projects that might be coming up? So that's typically what I say. Sometimes it's shorter, sometimes it's longer, but I kind of just ripped off the main problem we're solving is internal resources are stretched too thin. You have a project, you need to get that across the finish line. I was curious, Jay, to learn how we might be useful to you down the road. How's my time?
got it.
That's how I pretty much open. I mean, I have more targeted calls. Like if I know someone is out in the market and they have a big project coming up, yeah, the reason for the call is going to be a bit different. But if I'm just going down a list of 100 people, I'm saying pretty much the same thing. Like I said, sometimes it's shorter. If they're a fast talker and I can tell they probably want to get off the phone quick, maybe the reason for the call, Jay, I was curious, how do you guys approach projects from a project management perspective? Is it all internal? Do you ever outsource and then just start the conversation from there? But I kind of base it off of their tone, their tonality, and their pacing.
Yeah.
It's like that. But I did come up with a potential one that might work for real estate, Jay. Let me see if I have it here. And forgive me for reading this, but so one that I was just playing around with today, after I got permission from a potential home buyer or home seller, whoever you're calling.
Yep.
You know, the reason for the call, Jay, is I'm working with several home buyers that are looking to move into your area, but there isn't a lot of options because inventory is so low. So right now, sellers are getting multiple offers, which is pushing closing prices way up. I was curious to learn how we might be useful to you and your family down the road because I realize, Jay, you're probably not in the market today to buy or sell a home. How's my time regarding any potential real estate needs you might have? And then really just get into a conversation and go from there.
Yeah, I like that a lot, and that's why I want to reach out because the line or the scripts are so called that I have been using. Just I feel it's not working, so I was like, I need to reach out and really see if there's any things that we can start to change up. And I think that's a phenomenal script because what I'm realizing is, the more opportunity you can continue that conversation and open up other doors, you can open up the first door on the back end, at some point.
Yeah.
That's really the goal of just continuing that conversation, as that conversation moves forward.
And I think the biggest thing with why the permission-based opener is so important, if I didn't ask for permission, I would probably rush through my script or my framework.
Yeah.
But because I got at least a minute time, I could go through that script with confidence, the right tonality, the right pacing, and I'm not rushing through it. And then they're like, oh, this guy just sounds like a sales guy. He's talking really quick. I'm calm. And usually, I mean, when you say here with the script, I realize you're probably not in the market to buy or sell a home today. You're kind of taking away, that's probably one of the main objections you get, right, Jay?
Yeah. Yep.
You're just taking that right away, right out of it's gone. Like now the buyer can't even use that on you.
Yeah.
Because you brought it up that you realize you're probably not in the market. I was just curious how we might be useful to you down the road when you are in the market. What do you look for in a real estate agent? And then just get into a conversation. That's what I'm trying to do. Just make contact, start a conversation, and get to the first objection as quickly as possible so I can handle it. And Jay, like when I'm cold calling, like I make a ton of cold calls. When I'm cold calling, I'm not asking everyone for a meeting. Like, if you're engaged and you're answering my questions, even if there's a lot of objections, but if you're engaged and we're having a two-way dialogue and it's not just one-word answers, I'm 100% going to gun for a meeting.
Yep.
But a lot of the times that's not the case. And a lot of the times it's really just me finding out when it makes sense to get back on their radar for what I do. Because right now they're probably not in the market.
Yeah.
But
yeah, and that's the the benefit that we do have. If they're maybe not being in the market right away, we can get them per neighborhood that they're in. We can get them into our CRM, and they get minimum a quarterly update of what's going on. Additionally, getting mailers sent out in neighborhoods that we really want to target. So we're constantly being there, but it's just following up too on. Obviously, they see mailers going out, and then continuing to make the cold calls after that as well.
Mm-hmm.
So just hitting on every avenue.
Gotcha. Now, would you, for that 72-hour program that you guys have, are you leading with that on cold calls, or is that just?
No, I'm not leading with that because I just feel like you're going in for the kill right away, and that's like the first way to just put the ball up. You know what I mean? So.
Yeah, I was gonna say I would probably not lead with that, but if someone has some engagement and some interest, I would definitely.
And how I was starting to implement that was, hey, if you wouldn't be opposed, would you like to learn more about our different home sale programs, including our 72-hour promise program, which means if we don't sell in 72 hours, we'll sell it for free. Just picking up on what you said the other day, but that's after a continued conversation. So it's just, hey, once we get a little bit on the hook, boom, that's when, hey, would you be opposed to learning more? So that's where I've started to implement that more.
Okay.
So
awesome. That makes sense. So what other, I guess, questions you have as far as like the cold call opener or opening? Like I said, I'll send you those openers.
I'm glad that you mentioned that. And if you could forward or just send over the body that you just said, as far as that.
Everything over. I'll send everything I use. I'll send everything that Josh Braun has, and I'll send over the opener that I put together for the real estate agent.
Cool. Yeah, I'm glad that you mentioned that because I want to ask you too if there's any resources that you really go after. But obviously, I'll dive into Josh's content.
Yeah. Do you happen to follow Brian Casella, Jay?
I've heard of the name, but I don't.
Yeah. So he is a real estate agent. I think either he's with Keller Williams or used to be. Yeah. But he has a YouTube channel. Philly, right? I'm sorry?
He's out of Philly?
He's out of California, but this week he moved to Florida. So that was a big thing on his YouTube. Yeah. But he has a ton of I think they're fake, but he has a ton of live cold calls on his YouTube channel. He's really, really good. And it's all real estate. So
there's another guy too, Ricky Caruth. Yep. He's pretty. If you ever heard of him, he's pretty good as well. So
I think I was watching a video today and it just came up on YouTube, but it was a Brian Casella video. The next video was Ricky interviewing Brian. So they're great guys, but I will definitely send you my script. I'll send you the real estate script, and I'll send you Josh Braun stuff. I guess what else? I know you wanted to get into voicemail, so we'll get into that. But what else? I guess with the cold call, were you wanting to go over?
No, I mean that gives me a good direction to go in. More or less, I just wanted to reach out as a resource to make sure I'm going in the right direction. Knowing that it's something that you've really taken a dive into, and it's been a main focus. Yeah. So hey, if there's the two people that you'd really suggest, and then I do the A/B testing. That's a big takeaway. I'm glad you mentioned that. And the permission based too, because what I do like about that, statistically, if you can get someone to say yes before you're going into, your actual not pitch, but your intro of what you're saying. Yep. Ultimately, if we can find a way to do a double yes, that would prime them, in their decision making. But it just in a cold call, that's not going to necessarily make sense. But I feel it just opens someone up, to just additional or just grabbing an email to get into the database.
Yeah, Jay, and these people, they're getting calls from everybody, and everybody is opening the call the same way. Jay, it's Matt with Keller Williams Realty. How are you? They're getting the same sales pitch. So if you could be a bit different and unique, you're kind of disrupting their process, and you're going to have a better chance to keep them on the phone. I mean, there's been so many times where people have laughed and was like, "Oh my God, I got to give you at least a minute for that opener." It happens at least once a day.
No, I would do the same. I'd be like, well, hey, like you gave me a different opener. I'll give you the minute. I appreciate it. So, which makes sense. You're always calling business people.
Mm-hmm.
You get to the right person, they're going to be like, hey, well, I appreciate you doing something different. I'll give you the time of day.
Yeah, and it's so much harder what you're doing, man. B2B is so much easier than B2C.
Oh, yeah.
Like
Yeah.
it's not even close. It's not even close. I couldn't imagine B2C, but you guys are great at it. So
well, it helps. It helps to have. I mean, we've done very well from a marketing perspective to bring, especially with buyers. We have about 23,000 people in our database, so we have a bunch of warm leads that are there. But now that's why now that we're really putting a big, large focus on sellers. We're taking what we already have coming in, but now we're focusing on making the calls, doing the additional circle dialing to get to a point where getting a proficient, especially in like Mojo Dialer, if you get 3 lines going at the same time, you could crank out 100 phone calls a day pretty quickly, or 100 dials. Within, just say 70 minutes, you just put your phone on focus mode and block all your notifications out. You can get 100 dials in 70 minutes.
Mm-hmm.
Do that for a week. I mean, that's 500 calls. It adds up. There's one guy that he's extremely good at phone calls. The rest of his business he's really struggled with, but he makes about 1,500 calls a week and does extremely well.
Oh, I'm sure he does.
Yeah. He's an absolute nut everywhere else, but he does that very, very well.
Cool. So. It's awesome, man. And I will also, Jay, I'll send you the questions I use on cold calls, because you could probably adapt them to what you do. And I'll send you how I invite myself out of the call, what we went over last Wednesday. Like, would you be opposed? Would it be a terrible idea?
That was a big one, man. That made so much sense. So
like, would it be a terrible idea to see if there are other options out there that might get your home sold that you might not be aware of? Like things like that. Another book I would probably read is Chris Voss.
Yeah.
Oh my gosh, what's the book called? Now I'm forgetting the title.
I know who Chris Voss is.
Chris Voss. I think it's Negotiate Like Your Life Depended on It. I forget.
Yeah,
downstairs, whatever it is, but all of his techniques I use when it comes to handling objections, negotiating, like if it's not a cold call, but it's actually a sales pitch, and the inviting self out of the call. Like, go for no every time. It works more than yes. Yeah. Or that other technique where you give them an out. Jay, feel free to say no if this is just not a fit whatsoever, but are you open to meeting next Thursday at 2 to see if we can help sell your house?
Yeah.
Those 2 techniques have worked pretty well, but I'll send you all that too.
Cool. Appreciate that.
And then
you utilize any type of NLP type techniques or?
Yeah, so I learned a lot of that actually from Brian Casella.
Okay.
So gotcha. I got to get more into that, and I know that Jordan Belfort has a course on that, and he's big into that stuff. Brian Casella has some stuff like masterminds on it. I got to get more into that because it is pretty powerful stuff.
Yeah, I was just watching the podcast with Grant Cardone and Jordan Belfort. Man,
oh my gosh, man!
It was. I got respect for Grant. He's a great marketer, but when it comes to sales, Jordan just ran the table on that, man.
Did you watch the YouTube video of them together, or did you just listen to it?
I watched the whole video. I was like,
he looked so uncomfortable. He looked so uncomfortable, and he was just in there to disagree with him. That's what his main goal was, and he made himself look kind of like an idiot, I thought.
He did, yeah, he did.
Yeah.
Yeah.
Something, man. Those guys are good though. I listen to both those guys.
Yeah.
And then Jay, as far as the voicemails, so for me, a couple things that might work for you, like when I'm leaving a voicemail, I'm saying my name and my company. That's the last thing they hear. I'm not saying it up front, and I know it might sound a bit weird to say your name at the end and not at the beginning, or at the beginning and the end. But the reason I say it at the end, again, most salespeople will say it at the beginning. And secondly, it forces the prospect, whoever you're calling, to listen to the entire voicemail because they're like, who the heck is this calling me?
Yeah.
So if I'm leaving you a voicemail, typically the first voicemail, and this might be more difficult for you because you might not have their email, but typically the first voicemail I'm leaving is, Jay, happy Tuesday. Expect an email from me later today with the subject line XYZ. It's Matt with Watchdog Project Management. Not even leaving my number. Hanging up.
Yeah.
So I'm saying the reason for the call, maybe the reason for the call, Jay, was curious to learn. I saw your house was on the market and was taken off the market. Curious to learn what you're doing right now or where you were going to move if you were to sell the house.
Yeah.
Expect an email later today with some new strategies that might help you sell that house. It's Matt with Keller Williams. I just made that up, man. I don't know if that's an actual voicemail that you guys would leave, but
No, that would, I mean, no, in the right situations. I mean, a big thing that we're all, another thing that versus just going circle prospecting is just going to old expireds that might have been 2-3 years ago. If the house didn't sell back then, unless it's a complete teardown, basically, and even then, it'll probably still sell. Someone will have the appetite for it from an investment standpoint.
yeah.
So we're going back on those older expireds, and yeah, I mean that the script that you just utilized would work.
Okay. Yeah, man. Like, I don't expect to ever get a call back. I get callbacks here and there. I don't expect them to. All I want them to do with the voicemail is just consistently hear my name and voice in their phone, see my
Yeah.
emails, build some awareness, and really just point them to an email. So if I could just point them to either an email, a LinkedIn message, a LinkedIn connection request, whatever it is, I'm just trying to point them somewhere else because people hate voicemails. I hate getting voicemails. I hate listening to them. So I try to keep it as short as possible, like 15 seconds. So one that I use a lot is, Jay, the reason for the call, curious to learn how you and your team approach capital facilities projects from a project management and cost estimating perspective. Jay, I just sent an email to your inbox with the subject line ABC. It's Matt with Watchdog Project Management. So I'm just pointing them to an email. But your business is different. Your business is much harder. You don't necessarily have the email addresses. I have them all.
Yeah.
So it's much easier. But something that I wrote down here for what you guys are doing with the 72 hours maybe could sound something like, Jay, happy Tuesday. Reason for the call, we're seeing a lot of interest from home buyers in your area, but there's low inventory. We actually just came out with a new program for homeowners in the area where we will sell your house for free if we don't sell it within 72 hours. Expect an email later today with more information on that program.
That would work great.
It's Jay with the Bright Home Group, right?
Bright Home Group, yep.
The Bright Home Group.
Yep.
And you can leave your number if you want, but if you're calling somebody, they probably could see your number in their phone. But I'll send you that as well. But yeah, I mean, voicemails are tough, but I think saying the name at the end, giving them a reason for the call, if there's a way to personalize it in any way, that always helps. But yeah, kind of just think of it as a like an amplify device. Like you just want to amplify your voice, your name in their phone.
Well, yeah, and that's the goal. I mean, it's when I was first, up until like 2014, the average touch amount was like 8 to 9 touches in our industry. Now it's up to 21. So, you know what I mean? So it's basically tripled in a few short years. So that, we've identified certain neighborhoods that we're going to send mailers, postcards out to simultaneously as we're targeting the actual homeowners and stuff like that. So from a phone perspective.
21, man. That's B2C. I think for B2B, I think right now it's at 16. So significantly less than B2C. But how many people are on your team, Jay?
We've got 12. Well, we'll have 13 here soon. And that's including my business partner, Bill. So that's all of us.
Jeez, man. You guys are growing.
Yeah. There was actually more. We had more at one point when we first started. And then about this time last year or in March, right when COVID was kind of starting to all unfold, we realized we had to let a few people go. There were some big producers, but they were starting to become a cancer for the organization. No, it wasn't. And a lot of it reflects back on us because the situation I left, our egos were just, hey, we want to grow as much as we can. become as big as we can, as quick as we can. And we lowered our standards. And I knew it as we were doing it, man. And then just got to a point where it was like, yeah, we got to make this change. So it was a great learning experience, and it was the best thing that happened. And now it's like everything's starting to come together, and we're going from, hey, we're a startup to organization. So it's building the systems out. Like the last couple of days I spent, our whole admin department creating manuals for everything that they would be doing, and then also creating videos too. So they can literally go into a Google Drive, a shared Google Drive, break down buyer, seller. They open up the buyer tab. They know exactly what they need to do in each state. And then they have the screen share videos where they can know exactly what to do. That way, if someone would leave, or we're already adding more admin as we go, it's a lot easier for us to train. Because the last thing I want to do is be self-employed my whole life. I want to move to the business owner category, which is creating the systems and stuff like that. Which there's a great book on that, the Cash Flow Quadrant.
Cash Flow Quadrant.
Yep, I'm sure you've heard of Robert Kiyosaki.
Oh yeah, dude.
Yeah,
hold on.
Rich Dad Poor Dad.
There we go, man. There it is.
Yeah. So that's the Cash Flow Quadrant. That book is just it's a lot of the principles in that, but it just takes it down to, it breaks down into 4 different perspectives of employed, self-employed, business owner, and investor. Okay. So there's your different cash flow quadrants of where it can come from. And obviously the two on the left side, whether it's employer or self-employed, you're spending a lot of time to generate income. Mm-hmm. The other side of the quadrant, business, you own the systems, the income becomes automatic. And then obviously investment, you just have your income that's feeding the investments, and then it becomes perpetual. So
I gotta read that book. I mean, I read
it'll change your life, man. Like I was recommended actually by another agent that's on our team, and it was really a big eye opener for me, and everything's starting to come to fruition. After reading it, it just it was things that I knew, but everything's just starting to materialize, mentally, and that it's actually getting built out.
It's awesome, man. I mean, I think. So I read Rich Dad Poor Dad this past summer.
Yeah.
So after I read that, I'm like, I'm sorry?
I know that changed your whole perspective.
It changed my whole perspective. My dad read it, changed his whole perspective. We got into bigger pockets. And I know you know this. We're trying to get into real estate investing. But I think in 15 years, when I look back, that's probably going to be the most important book I ever read, hands down.
Yeah, exactly. And it's a great book to get started, because it's vague enough that it's not too it just teaches the core principles, and it's a very easy read. Mm-hmm. And then as you progress there, you can get into more in-depth books, and stuff like that. But it does such a great job at just shifting your mindset, and the Cash Flow Quadrant will shift your mindset.
Yeah.
And they have some other great books too. I just went through the audiobook. I think it's Why the Rich Get Richer or something along those lines. Okay. So it just identifying, but the core value, it's just taking what you learn in those books, and then it just compounds. Yep. The biggest thing is the wealthy use debt to leverage their wealth, and then obviously tax benefits as well. So that's like the two big things that you pull from that, and then it introduces some basic systems on how to do that. But there's a big reason why the wealthier people are just expanding their wealth right now, because interest rates are at an all-time low and continue to be that way. So and you start to roll in, if you can 100% finance and it makes sense, you start to generate phantom income, which is what that book talks about. Because for example, if you're buying a house that's, for basic number purposes, $100,000, and you're putting 20% down. Well, depending on your tax bracket, if you're and obviously depending on state that you're in, but just say in total between federal and state, you're at 35% you're paying taxes on. If you're putting 20% down, it's really costing you more than that, because of that taxable money is now being used for a down payment. But if you can get that financed 100% and it still makes sense from a cash flow perspective, you're saving a good chunk of percentage, and that's where you start to generate phantom income, which is what they reference. So
that's awesome, man. That's
yeah,
awesome. And
yeah,
I got some questions for you, man. Like, as you know, I'm trying to get into this real estate investing
yeah.
with my dad, and it's been hard to even find properties that work. So our main
It's tough, man. It is tough right now.
like our main goal right now, or not goal, but target is duplexes,
Yeah,
triplexes, like multi-unit properties, so I could house hack.
yeah,
So I mean, we found a few that actually work math wise. We plug them in the bigger pockets calculators. So we have found a few on the MLS, but the amount of things that we went through to find them, I mean, we're analyzing a ton of properties a night, and it's been hard to even find the few that we've found. So it's just been,
yeah.
I don't know what the market looks like in Delaware or what you're seeing.
It's tough here. I mean, from a rental perspective, man, nothing is I'm finding on the MLS. It's just until it hits the MLS, man, there's just too many buyers that are out there.
Exactly.
What I would targeting duplexes and multiplexes, I would just identify. Do you have specific towns or areas that you're targeting?
Suburbs of Philadelphia.
Okay.
I probably wouldn't buy in Philadelphia because it's harder to evict if you get a bad tenant. I mean, obviously we don't want to get a bad tenant, but yeah, suburbs, New Jersey, Delaware, really, man, wherever we could within driving distance. And if the
Yeah.
math works, we'll look into it. Yeah.
Yeah, and the reason I brought that up, as you just say, you would find a property that would make sense. Get privy to the actual ordinances that city or that township, whatever, has. For example, like Salisbury, which it's actually in Maryland, but we literally straddle. Like my office that I'm sitting in now is 2-3 miles from the Maryland border, so we straddle. Yeah, we're constantly going in and out. But Salisbury, like where the university is, they have specific ordinances on the housing, and duplexes and multiplexes, for example. If just say there's a tenant in there and then the tenant moves out, the landlord, something happens and it sits vacant for 2 years. The ordinance states that if that property sits vacant for over a year, the city holds the right to force you to convert it back into single family.
Wow. Okay.
So you definitely want to do your homework
Good to
on that.
know.
Yeah, because you could really lose for lack of a better term, you could really lose your ass. Yeah, and that would go back to, the seller would have to disclose, things properly. But that was one thing I want to definitely point out. Yeah, and that's really the only city in our area that does that. But I've seen people get burned by it, man, and it really, especially if it's their first or second one, it's a pretty difficult hole to dig out of.
Yeah.
If there's a university around as well in that town, you typically see more ordinances. There's another ordinance in Salisbury called the 4-2 ordinance, which basically states there's no more than 2 unrelated people allowed in a house to combat college students. They have a list of, there's probably like 350 homes that are grandfathered in within city limits, but yeah, and that's with that ordinance being passed, that's what led to the passing of the ordinance for the duplexes and the multiplexes. So it's just typically it just said, like, I'm just thinking of a suburb like Westchester, for example, probably a little bit farther than you want to be, but I'm confident they have some more ordinance just because the university's there. So just anytime there's a university nearby, I would just do a little extra research and just to be safe.
Really good tip, man.
Yeah.
What are your overall thoughts right now with
the housing market?
Housing market and really, like, is this a good time to get into real estate investing? Like, me and my dad were super energetic and pumped to do it, but we know that this can't be an emotional decision. It has to be a business decision, and the math has to work. Like,
it does.
That's one thing. Like, the math has to work. It has to be profitable.
Definitely being disciplined in what your criteria is, and if it doesn't fit that, move on. That's very important. I'm still personally investing, so I'll let it go with that. But what's helping right now from keeping me what's helping me stay in the game is just interest rates are lower. So the cash flow is still there. Just say property values would go down. I plan on holding everything for a while, so eventually things will pull out, or we'll pull it'll appreciate, and you only lose money in real estate when you actually sell. And then you start to put in the tax benefits into it as well. That starts to compound. So you're adding, for example, if you're looking at your cash on cash return, you factor that in, and then if for me, it can provide a pretty significant tax. Like last year, it dropped me an entire bracket. So if I factor that in, it made a substantial difference. And you start to look at your cash on cash return. Cool. Well, I may not make as much as I thought I was, but you start to factor in all the other factors. Okay, this becomes a lot more attractive. But tying back into what my feeling of the market is, there's nothing we can really compare it to. The demand that we're experiencing. Even during the 60s, you just didn't have there was a lot that was going on, but you could compare the 2019 market to what was kind of going on in the 60s, but then you threw the pandemic into it and how it just shaped how the U.S. culture is moving about. There's nothing to compare that to. And it just created this unprecedented demand. And then just with the supply chain issues that's affecting new construction, it's just, I was going to tell of how it goes down. But what I will say is, buyers, there's still strong appetite there, and there's no speculative buying going on. That's when I always get, anytime you start to see speculative buying going on, and whether it's real estate, the stock market, and the stock market is a great example. If you remember everything going on with GameStop.
Yep.
That was like the peak of the stock market, and ever since then, things have been dropping back down. It's just, you have investors that are getting in, speculating that, hey, things are going to go up. And then all of a sudden that starts to fall down quickly. And that's what happened back in 06 and 07. You had folks, there's still communities in Vegas and Florida that still sit empty because they were go signing the paperwork with a builder, just say for $400,000. And then, they would go find another buyer that would purchase the house in 9 months for $475 or $500. Then all of a sudden the bottom dropped out and no one could pay for it.
Yeah.
So, and that's, I haven't experienced that yet. So you have end user buyers from, actual homeowner perspective, but then investors too. They're buying stuff because they want to hold on to it, or they're buying stuff at the beaches because they want a second place to be. Yeah. So that judgment has never failed me. Anytime I've looked at that, anytime I see speculative buying going on and it's not end user buyer, that's when you have to start looking like, okay, I need to be concerned a bit here. So I would focus on cash flow and take advantage of the interest rates of where they're at.
Okay.
Now, and that's, in my opinion, I think when real estate prices will start to fluctuate, or either start to even out once interest rates start to pop up a bit. And we did back in I think it was 2018, like around like the first or second quarter, the Fed increased their rate, and then that caused mortgage rates to go up as well. They were in like the 5.5% range, like 5.5, and it certainly slowed pricing down. And because 2017 things were really taking off, and then 2018 things tapered off a bit. So that, in my opinion, I feel like that's what's going to eventually become the thing that's going to reduce. And you're just going to have demand that becomes reduced as the initial, pent up energy, or just all the changes that the pandemic initially created are going to subside. So.
Got it, man. Like, one last question for you, Jay. Just around like mindset when it comes to investing in real estate. So, me and my dad, we're novices, man. We're just starting out. We read a few books. We're on the Bigger Pockets website. And one of our main things right now, and this could change, we're like, you know what? We cannot look at a property unless it has at least 7.5% cash on cash return, because that's the S&P 500. I'd be better off just putting my money in the stock market and watching it grow than dealing with this property.
Yep.
Is that an okay mindset to have? Because we're kind of, like I said, we found a few that have north of 10% cash on cash return, which is good. I mean, they're not the right property to buy because of other issues, but
Yeah.
is that the right mindset to have when it comes to investing in real estate? What do you think?
Yeah, as far as cash on, in my opinion, I haven't touched anything less than 20%.
There you go. Awesome. And
Because
to your single family, multi, like what does your portfolio look
both,
like?
mostly single family, but I just it won't be worth the BS if you're only getting that 8%.
I'm really happy you said that, man, because we're looking at it the same way as you.
Yep.
Like if it's not anywhere close to 15%
Yeah.
return,
Yeah.
I'm with you on this, man. Because some people are like, just get the house. If it's
Yeah.
a 5% return, you're still building equity in the house. The house price is going to get, but all that's factored into it. All that's factored into that math, that
Well,
calculus.
and you want that cash flow and the cash on cash return to be higher, especially right now. I would say now more than ever, because you want to hedge against the fact that, hey, if prices would go down, you want to have that. You still want to have the cash flow, coming into home base, so to speak. Then you can ride that wave for 5-10 years, and you're still fine. And that's the biggest thing you want to keep in mind. I will say the exception, and this is more or less when you're dealing with owner financing. And
Okay.
I had to do this to structure. There are certain deals I've structured this way, but I'm going back and forth with the seller, the owner of the property, and then just kind of just hit me out of the blue one day. I was going to have the bank finance, and I was like, wait a minute. If I already had plans to make improvements to the property, I can make this deal attractive that he's probably getting within 8% of what he's getting already with just rents, but I'll just pay him a higher interest rate, which you can deduct all that interest rate on your taxes anyway.
Okay.
So the cash, like the returns will go down in some sense from that, but it still works out. Plus, you're going to be purchasing it for a lower purchase price anyway, typically in that situation. So it's a give and take, but I had that work for me at one point. I was like, because I really wanted the property, and I was like, wait, well, this guy doesn't. I know he doesn't want to deal with the stuff anymore, and if I can get within, my goal was to get within 10% of what he's already making on rent. Well, if I can just give him the payment, it's kind of a no-brainer for him. No different than the conversation we just had. If for 8 to 10% less money, he can now just collect the money on a monthly basis and not have to worry about stuff. It makes sense.
That's awesome, man. Jeez, I learned a lot, man. This was
Yeah,
good.
but that's the current, with everything being so tight right now, it forces you to get creative. So
Yeah, and we were talking to some wholesalers, and we're on a few lists for wholesalers, and that's a
yeah,
whole different beast, man, when it comes to those. I mean, most of those properties are really shitty.
they
They
are.
have a lot of renovation. I mean, guts and me and my dad. Listen, man, Jay, I'm the least handy person in the world. So is my dad.
Yeah,
So
I would recommend you want to avoid that right out of the gate. I mean, it would make a little bit more sense to spend a little bit more money, because the issue right now is just the supply chain. So what you got to be concerned about is, even if you get a really, really good deal on something, material costs, they're going to continue to go up. You're going to have just account for 2 to 3, just 2 more months of, depending on what the scale of what you're doing. Now, if you're putting windows in and this and that, because you got lead-based paint to deal with, there's a window shortage, so it might take even longer. So now you've got payments to make to the bank. You've got no tenants in there. You can't even market it because your renovations aren't even happening. Things can really start to add up quickly. Where if you just get something that's more turnkey and cosmetic, like carpeting, flooring, those type of things, you'll be able to learn the right amount that you need to learn in the beginning, and then you can always decide to add on as you go. Like right now, I wouldn't blink an eye at certain projects, but in the beginning, I was, the first couple that I had were good. The first one was basically did a similar thing that you wanted to do. We rented a house in college, and I went to him and was like, wait a minute, what if I just see if I can buy from him and just owner financing? And that's what we end up doing.
You do
So
that in college?
yeah.
Oh,
Yep.
dude, you were way ahead of the game, man.
Yeah.
Good. That's awesome.
Yeah. So it was, we were just I was looking at, I was like, wait a minute, like, this makes sense. And we were able to work out a deal, and because he was just done with it. And there was repairs that would had to be made. And there was some cash that I had just from working and hustling in the summers that I knew I had the cash to do it. And the cash flow that I was going to get was more than double of what would have been paying, to him. So it was a no brainer.